All right, so Exxon Mobil just dropped their Q4 2025 earnings, and on the surface, the results looked pretty darn good. But the market's reaction? A little complicated. So in this breakdown, we're going to dig into the numbers, figure out what management was really telling us, and get to the bottom of why the stock didn't exactly shoot for the moon. Let's dive right in. So here's the game plan. We'll start with the headline numbers. Then we'll get into management's core message. After that, we'll look at the market's reaction. And we'll wrap it all up with our take on the next call. Okay, first up, the headline numbers. Let's see how they stacked up against what Wall Street was expecting. So, on the bottom line, Exxon delivered adjusted earnings of $1.71 per share. That squeaked by the Wall Street consensus by about 3 cents. Nice. Revenue, on the other hand, came in at $82.3 billion, which is actually down a little over 1% compared to last year. So the big picture here, a solid beat on profit, but sales dipped just a bit.
But honestly, here's the number that really matters to investors. $9.5 billion. That's how much cash Exxon returned to shareholders in this quarter alone. You've got $4.4 billion of that in dividends and a massive $5.1 billion in share buybacks. I mean, that is a huge statement about where their priorities are, and that's getting cash back to shareholders.
So what's the engine behind all that cash? Well, it's pure, massive production. We're talking nearly 5 million barrels of oil equivalent per day. That's a staggering number, and it's being driven by record-breaking output from their two crown jewels. You've got the Permian Basin right here in the U.S., and that monster project they have down in Guyana. Okay, so the numbers were definitely solid, but beyond the raw data, what was the story management was trying to tell? Well, it really boiled down to two key things: execution and what they call their advantaged assets.
Yeah, CEO Darren Woods really set the tone with this quote right here. He's talking about capturing more value and building a long runway of profitable growth. Now, what he's really saying is, hey, this isn't just about one good quarter. The whole strategy here is to build a long-term structural advantage that their competitors just can't easily replicate. And they backed up that big picture story with 4 key pillars. First, those advantaged assets we mentioned. That's the record production from the Permian and Guyana. Second, they pointed to their portfolio balance. Their downstream refining business was really strong, which helped offset some softness they saw in the chemicals division. Third, they just doubled down on capital returns, recommitting to that $20 billion share buyback plan through 2026. And finally, it was just about pure, simple execution. They delivered on all 10 of their key projects for 2025. Boom. Done.
And looking forward, management gave everyone a really big date to circle on their calendars: the Golden Pass LNG facility. It's expected to produce its first LNG in March of 2026. Now, this is a massive project, and it's probably the most important near-term catalyst for the stock that investors are watching. All right, so let's recap. We've got a solid beat on earnings, a really strong story from management, and a clear catalyst on the horizon. The stock should have just taken off, right? Well, not so fast. The market's reaction was, let's say, a bit lukewarm. And this is where things get really interesting.
So that's the million-dollar question, isn't it? After a report card this good, why the quiet, almost muted applause from Wall Street?
And honestly, this chart right here pretty much tells the entire story. Just look at this. In the year leading up to these earnings, Exxon stock was up over 32%. That's literally double what the rest of the energy sector did, and double the S&P 500. So when you have a run-up like that, let's just say expectations were through the roof. So what's the diagnosis here? Well, it's a classic case of what traders call buy the rumor, sell the news. Folks like Barron's pointed this out too. All that incredible performance, it was already baked into the stock price. The bar was just set so incredibly high that even a really solid quarter wasn't enough to spark another big rally. The market, it seems, had already paid a premium for Exxon's best-in-class execution. Okay, so that's the story of Q4. Now for our favorite part here at Talk Tickers, the next call. Let's look ahead and give you our take on what to expect for Q1 2026. So for the Q1 results themselves, we're expecting a pretty standard inline quarter. Nothing too crazy. That operational machine in the Permian and Guyana is just going to keep humming along. But what about the stock price? We actually see it trading mostly sideways, kind of range-bound. Its movements are probably going to be more sensitive to the big macro trends in oil prices rather than any company-specific news, at least until we get a lot closer to that Golden Pass catalyst. All right, now for a little fun, let's put on our wild but plausible trade idea hats for a second. How about a pairs trade?
You go long on Exxon Mobil stock, and at the exact same time, you short the XLE, which is the big ETF for the entire energy sector. What's the thinking here? Well, the thesis is pretty straightforward. You're making a bet that Exxon's superior execution and its advantaged assets will help it continue to outperform the broader, less differentiated energy sector. It's really a bet on the best-in-class player against the rest of the field.
So, when you pull all of this together, what's our official rating on the stock right now? We are assigning it a rating of market perform. And here's our thesis in a nutshell. All that fantastic execution, it's already priced into the stock. From these levels, we think the stock is just going to perform right in line with the broader market. For it to make another significant move higher, it's going to need a big macro tailwind, like a major surge in oil prices or some brand new catalyst that nobody is even thinking about yet. And as always, we have to end with our most important reminder. Please remember, none of this is financial advice.